Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Wednesday, August 29th. Well, we started off on a little bit of a weaker note last night, but as we speak right now, we firmed back on up and around the plus side. Beans are back above $17, corn back above $8. And I think we've got two main factors that have been going on in here. Of late, we've been a little bit suppressed in our prices. And I think what's really going on there is more mechanical, as we mentioned yesterday. I think we're coming into the first notice date for the September contracts. That'll be Friday morning. And that's a natural liquidation type atmosphere. We are not looking for any bean, meal, corn, or wheat deliveries, and maybe in the neighborhood of 2,000 to 4,000 oil. And it's also the end of the month. It's also the start of a 3-day weekend. So that, I think, is what's been kind of suppressing prices. We've been seeing open interest go come on down in the marketplace, as we did have a buildup of longs in the market on the commitment of trades report. So that's one thing that's been kind of suppressing the market. But on the flip side, what's been supporting us underneath here is that we saw somewhat of a litany of tender activity occur both in the beans and in the wheat over the past couple of days. Yesterday morning we had an announced sale of beans to China from the U.S. We also saw Taiwan come on in and get extended coverage of both U.S. and South American beans. We also saw Tunisia, Lebanon, Jordan in for wheat. Last night, Saudi Arabia is back in looking for 550,000 tons of wheat, and Syria is looking for wheat. So as we went and suppressed the market, as far as mechanics go, we're finding demand underneath the marketplace as the users start to step back on up to the plate. We're also still a little bit nervous on the price breaks about what the yield's going to be for the corn and beans. There's still not any good reports coming from the field as we are still working our way through early harvest. We're also picking up some support from the fact that we had an ag conference going on out in Thailand. And a lot of reports, mainly for soybeans and soybean meal, have been real supportive as far as the Southeast Asian countries go. A lot of them are out there looking to continue with their expansion of consumption and their expansion of imports for both beans and soybean meal, and most of that in the nearbys look to come from the U.S. and hopefully down the road from South America. So we're not really seeing any contraction at these high price levels, at least for beans and meal at this time. And then maybe another little supportive feature that's starting to creep up a little bit in here is Australian weather. Could be a little bit supportive for the wheat and the canola market, that being an oil seed, as they're starting to move into their main time period of September to go and see moisture. And then one other thing, as far as the wheat support comes in here for the near term on the break, people are a little bit nervous as what's going to happen with Russia on Friday when they hold a grain meeting to discuss what their intentions are for grain exports, depending on what their production numbers are, and early yield talk is not all that beneficial. So anyway, seems like we're going to continue to hover around this $8 level for corn, $17 for beans as we work our way to the 3-day holiday. But as I said, it seems like to me as we go and work lower in here, we're finding demand and still worried about yield. So we're not really rationing. And the other factor will be, what will the farmer sell rate be over the next 45 days? Because that should be natural selling coming in, unlike what we've seen over the past few months. Once again, these are opinions of myself, not ADM or ADMIS. Thank you.